Do you get a credit? If so, how much and when will you get it? You've heard the rumors, now get the facts. Stay tuned. Good evening, everyone. Tonight we're going to talk about the COVID-19 tax relief bill that just passed and how it's going to impact you, and try to cut through all the nonsense that you've been hearing on the internet. My name is Doug Burson. I'm a CPA. I own the Paget Business Services in Lee Summit, Missouri, which is a CPA firm that focuses on small businesses and individuals. And I've been doing this for about 20 years now. So I want to share what we've learned. We've worked really hard to stay on top of this and to keep you informed. So let's go ahead and get started. First of all, I think it's important that you understand that this is the best information that we have today. This thing is changing and changing constantly. I just got a new update about an hour ago on some of this. So a lot of this is just changing. What you have to understand is when Congress writes a bill, that's just what Congress is writing. It then has to go to the Treasury, the SBA, and everybody else has to interpret it. And then once we get those guidelines, that's when we know what we're really doing. And so that's why this thing is still so fluid. A lot of the guidelines are being written as I speak. So this is the best I can give you today. If anything changes of substance, I'll let you know on the Facebook page. I think most of what we're talking about tonight, though, on this webinar is pretty set. So let's go ahead and get started. We know for sure that the tax filing deadline has been extended to July 15th. That's not a question. That's taxpayers, individuals, corporations. That's your 1041s. That's all of it. We also know that you don't need to file an extension to get that. However, with that being said, if you're going to need to extend beyond July 15th, you're going to have to file an extension just like normal to get that to October 15th if you're an individual. We do now know that contributions to IRAs and HSAs and retirement account type things have been extended to July 15th. That was one of my big concerns. And originally I was going to file extensions for all my clients to make sure they were protected. They have now extended that deadline too, so that takes care of it. Just be aware though that some states are not extending the time to pay, just the time to file. And so there will be interest accruing depending on if they go ahead and waive that. I know for the last I heard, for instance, Illinois has not extended the time to pay, just the time to file. So you need to pay attention to your local state to find out what is going on. So far, Missouri and Kansas have extended the time to file and pay, so we're good, and so has Kansas City. One of the strange things that's come out of this, at least our interpretation so far, is that your second quarter estimated tax payments are still due on June 15th. However, the first quarter has been extended to July 15th. Kind of crazy, but that's what they're saying. So if that changes, I'll try to let you guys know. But for now, your second quarter is due June 15th. Your first quarter is due July 15th. How about backwards? For those that have already had their tax return filed and they had the preparer set it up to do an automatic withdrawal from the IRS on April 15th, you can contact the Treasury. I haven't had anybody do that yet, so I don't know 100% how that's going to work, but they're saying you can contact the Treasury and have them move that. But if that's something you want to do, I would get on top of that right away and get that done, because otherwise, even though the extension has been moved to July 15th, if it's already been filed, as of today, they are going to draft that money on April 15th. So some other things that have come out now are special rules for the use of retirement funds. So what they've done is they've allowed you to pull money out of an IRA if you're below 59 and a half and not have to pay the early 10% penalty. That could be big if you need that money to get through this time. And to make it even better, what they've done is they said, you know what, you can pull it out and you can spread the tax over 3 years. So let's say you pull out $30,000, we can pay tax on 10,020, 10,021, 10,022. Another thing that's really wild about that is they've also said if you can put that money back within that same 3-year period, you are not going to have to pay taxes on that. We don't know how that's going to work on the tax returns yet, but they'll come up with a solution and we'll be able to handle that by the time taxes are due next year. They've also allowed you to waive the required minimum distribution. So if you are now having to take an RMD and you're looking at your retirement account going, I do not want to take money out right now while it's low, it's okay. You don't have to. You can now let that go and not have to do an RMD this year. That could be a big deal, so I want you guys to be aware of that. Another thing that they added is a $300 above the line charitable contribution. So if you don't have enough to itemize, you can deduct $300 across the front page of your tax return or above the line and not have to do it on a Schedule A, because a lot of us don't have enough to itemize anymore. So it's not a lot, but you know what? Every little bit helps. They've also actually bumped up the amount that you can contribute and have deductible. Now this is back to the Schedule A. And so if you contribute up to 100% of your income, it's an oversimplification, but that's the basic rules, you'll be able to deduct that on your Schedule A. It was limited before, but now we have up to 100% of our income. And we can also now carry our net operating losses back up to 5 years. It's now back, at least for now. And so if you end up with a big net operating loss this year, or if you've had one in the last couple years, we can now amend the tax return, carry that NOL back up to 5 years, and get you a refund now. Now, it's got to go through the processes, and it won't be overnight, but that does change things. And if you had a loss last year and your tax return has already been filed, we may want to go ahead and amend it or even look at a few years back. So if that's you, think about it, contact your tax preparer, contact me if we did it. We'll be trying to look for those too. So the one thing that everybody wants to know is, what about the credits? And I think most of us know this now. It's been out for a couple weeks, and this information is pretty solid. But there's people out there just talking and they don't know what they're talking about, and they're spreading a bunch of nonsense. And so I just want to go back and hit the basics. It's $1,200 per person and $500 for each qualifying child, and that benefit will start decreasing by 5% or $5 for every 100 you go above the phase-out period. So if you're single, the phase-out period starts at $75,000. As your income goes up to $99,000, it gets phased out $5 for every 100 or 5%. So once you hit $99,000, you're not eligible. If you're single, it starts at 100. Single. If you're married filing joint, it's $150,000, and the phase out ends at $198,000. So if you're in between, you will get some of this credit. And for those of you who are head of household, the phase out starts at $112,500. So those are good numbers. I've heard a lot of crazy stuff about how retirees are going to get $200 or $4,000 or all kinds of crazy stuff. Retirees on a fixed income who don't have to file, they also qualify for the $1,200. They're telling us they're going to be able to pull it from Social Security records or railroad retirement records and get you your money. If you need it faster, you can file a tax return, but they're saying they're going to get it to you. So I can't in a good conscience tell you to come have me file your tax return just to get it when you should get it anyway. And even if there's a problem, we absolutely now know that they're going to add a line to the tax return that allows us to reconcile it. And if you didn't get it, we can get it on next year's tax return. And think back 18 years ago when we had that last credit and we could get the rest of it on the tax return if you didn't get it. It's going to be like that. So what year is it going to be based on? Well, it's going to be based on your 2018 or your 2019 tax return, whichever was filed last. So if you had a 2018 tax return and you haven't filed 19 yet, it's probably going to be based on 18, because my gut tells me they're pulling that record if they haven't already. And by the time you get a 19 tax return filed, they're already going to have done it based on 18. As of now, I don't know of any remedy. Once they've pulled that number, that's going to be it, and I think it's going to be on the tax return next year. But we'll just have to wait and see. They may pull the number more than once. I don't know. I think once the checks are cut, that's going to be it, and we'll just have to wait and see for further guidance. If you had a high income in 18, you want to get that 19 filed, but you'll still get it on the tax return. And so don't get hung up on it too much. I know we all are looking for all the help we can get right now, but those are the rules as we know them. And just to clarify, I don't know when they're going to pull the records. It's possible they haven't pulled them yet, but I just know they're under a lot of pressure to get these checks out fast. And once you file your tax return electronically, it updates their records within about 24 hours. So I think they're going to be pulling that really, really soon because they want to get these checks out, because the whole idea is to get money out there to help people that are hurting and to keep the economy going while we're all going through this. So I would say 2 to 3 weeks from now is what they're telling us. I think that 2 to 3 weeks is going to have started maybe this last Monday, but we'll have to wait and see exactly. Don't spend it till you get it. You never know with the IRS. Even if they do go 2 to 3 weeks, what if they mess yours up? So don't spend it if you don't have it yet. Just been doing this a long time. Don't count it till you have it. As I already said, it will be able to be reconciled on the 2020 tax return. And the important part there that I want you to understand, and I don't want you to get worried about, is they've told us, let's say that you got $1,200 for you, $1,200 for your spouse, and $500 for your dependent. And then it turns out that you weren't supposed to claim the dependent on your 2020 tax return. They've told us it can only help, it won't hurt. So if you got more than you were supposed to, they're saying, congratulations, we're not going to take it back. So that's reassuring that you're not going to be looking at a debt down the road that you didn't know about. Now, on unemployment, I want to cover that for just a minute. I know this is individual, and we've got another webinar for business. But if you're a small business, a sole prop, you will be eligible if you've been impacted and you aren't able to work right now. You're going to be eligible for unemployment through Missouri, and that number is going to be $600 a week. Now, I'm just going to tell you right now, as of today, I have had clients that have applied, and Missouri, anyway, is denying the claim. Even though on their website it says you're eligible, they're denying the claim. Don't let that deter you. What I want you to do is there's a section there where you can then appeal. Appeal that, send something in saying you're applying based on COVID-19, that your work has been impacted and you're not able to work at the same capacity as normal, and you should still get the unemployment. So don't let an initial no stop you from following through. You should qualify if you're not able to work during this crisis, and I know a lot of you aren't. So I'm glad that that's going to be there for you. Don't not follow through. Now remember, a lot of this is interpreted. The Treasury does their part. The SBA is doing their part. The states are also in charge of the unemployment part. So it's going to be different states are going to get to it quicker. Just don't give up. The details really aren't in the bill. This was a congressional bill, but they've greatly relaxed the qualifiers, and the federal government wants those of you who are impacted to get this unemployment. So stick with it, and it should work out for you. So hopefully this has been helpful. If you like it, if you think it'll help others, please like it on Facebook or YouTube, wherever you're watching it. Share it with your friends, your family, anybody you think that can help them, because that's really what we're trying to do. Help as many of you as you can, because we're a small business too, and really we just want us all to get through this and get this economy going as quick as we can. So share it. Let's help as many people as we can, and that's all I got, guys. Talk to you later.